Ever wondered how people make money in the stock market? Have you heard it's a scam, or that you'll lose all your money? Perhaps you want to start using the stock market to grow your money, but you just don't know where to begin. Well, I was there just 4 years ago. Up until that point, I had never invested in the stock market. Well, that all changed when I decided to stop being a consumer and start building wealth for me and my family. And the stock market was going to be a part of that. In this short video, I'm going to explain to you what the stock market is, how you invest your money in it, and what strategies you can use. And stay to the end of the video. I'm going to go through the common mistakes that people make, including all the ones I did. Now, in the simplest terms, the stock market is a place where businesses can raise money to invest. They will sell you a small piece of their company that you can hold in your portfolio over a period of time. Now, the value of that stock can go down as well as up, but in general terms, the stock market has appreciated in value 8 to 10% every year. And it's this growth over time that will build your wealth. As you add more stocks to your portfolio, the value of that portfolio will grow. It could even grow to a size that provides you with an income and replace your salary. The companies selling the most popular stocks are probably the most famous companies in the world, ranging from Microsoft to Coca-Cola. The basic idea is to buy and accumulate these stocks and hold them while they grow in value over time. Eventually, they can be sold for a profit, or you can draw down on them over time, providing you with an income. Now, there are a few successful strategies that we can use to build wealth, and a few mistakes that we can avoid. But first, we need a special account to buy these stocks, and we call that a brokerage account. This is basically a bank account that you can use to bid, hold, and sell the stocks in. These brokerage accounts or trading platforms range from company to company, but essentially they all do the same thing. There are companies like Robinhood or Wealthsimple, and even your own bank will have a trading platform that you can use. Now, some brokerages and trading platforms will charge every time you trade. Some will be free. So do your research, check online for recommendations before you decide which one to do. Now, you can have several accounts. There's no limit. I've got 2 accounts, but for 3 years I only had 1 account with great success. Now, once you've got your brokerage account, you can link your bank account to it and put some cash in there. Once you have your cash in there, you are ready to buy some stock. Now, before I bought any stocks and shares, I watched some videos online on the types of stocks and their benefits. Now, the 3 main types of stocks are blue chip stocks, growth stocks, and ETFs. Blue chip stocks are well-established companies ranging in size. From Microsoft and Apple to the dollar store and natural gas, they provide long-term security and they are steady and dependable. Growth stocks are companies with the potential for high growth and profit. In recent years, semiconductor and AI companies have dominated this space. But with high growth comes more risk. ETFs, or electronically traded funds, are essentially baskets of well-performing companies that offer market returns and above with good diversification. Having a good diverse portfolio of stocks is very important, and I'm going to come back to that shortly. In a nutshell, you can make money short-term and long-term, but long-term is what most investors are focused on. After all, we're building wealth for the long term, to replace our income and even for retirement. Now, in my opinion, the best way to get started is start small. I put $100 in my new brokerage account and I bought a well-known blue chip stock, McDonald's. Before you purchase your first stock, do your research, read up about the company, or even invest in something that you know. Another stock I originally bought was Netflix. I knew the business and I used it, and after reading about the company, I understood its growth potential. Now, I added to that stock a little bit over time, and eventually I sold it for double the profit. And this is what we call buy and hold. You can hold the stock for days, months, or even forever. It's down to your strategy. Now, I've had stock go down in value as well as up, but you only lose the value if you sell the stock. You can hold it until it raises up again and then sell it. Typically, I will hold a stock and I will only consider selling it if it's raised in value. Now, another great way of starting your investment journey is to purchase ETF stock. Instead of buying stocks that you hope go up in value, you can invest in an ETF and it does it for you. One of my absolute favorite ETFs I hold is ticker FTEC. This ETF is a collection of successful companies with a focus on tech that is held by the Fidelity Group. And each month, I'll invest a small proportion of my salary in FTech to grow my wealth. Putting together and maintaining this ETF, Fidelity will charge a very small amount, but it'll take all the risk and stress of you picking stocks. They essentially maintain the fund, moving out less successful companies and replacing them with more profitable ones. This maintains a good rate of return for everybody who's invested in the fund. Now, investing long term is certainly a strategy I would recommend all beginners focus on. It's buying and holding stock over the long term to let compound interest do its magic. And investing a small amount each month will comfortably and confidently build your portfolio over time. This strategy is very popular. It's DCA, dollar cost average. Whether the market is up or down, you put in the same amount each month and build your wealth. As your portfolio grows over time, with an average return of 10%, it will grow exponentially. It's this magic of compound interest that fundamentally builds your wealth. Now, as with all new ventures, there are rookie mistakes that you can learn from, or even better, avoid. Now, likely the number one mistake for beginners is panic selling or emotional selling. Quite honestly, it's the worst thing to do, especially if you're investing long term. It makes little sense, and something that most people will have to overcome. When the market goes down, and it can do on a regular basis, there's a temptation to sell to minimize the loss. But as you learn, as the stock market falls, it will always rise again and continue to grow. And if you need confidence and give yourself a reality check, just check the history over the past 100 years. After the crash in the 1920s, the 1980s, twice in the early 2000s, and recently during COVID, the market has always bounced back stronger than ever. So whatever happens, if you're in it for the long game, resist panic selling. It will always bounce back. Remember, you never lose money unless you sell your stock under the value you purchased it. If there's a downturn in the stock market, hold as normal, let it recover, and watch your loss on paper return to a gain. Another rookie mistake is chasing the latest trends. Some stocks can be hyped up in the media, whipping up a frenzy of purchasing and buying. This is often referred to as pump and dump. Like everything else in life, if it looks too good to be true, it probably is. Another mistake to avoid is over-leveraging or over-investing. Once you get started investing in the stock market, it can often be exciting and new. The potential to overstretch your finances to invest can be a real thing to overcome. Don't get carried away by the excitement. Remember, it's a long-term strategy. Dollar cost average each month, only what's comfortable for you. Now, the final piece of advice I would give, and probably the most important, is keep yourself invested and educated about the stock market. Read books, watch lots of videos, and take an interest in the world of investing. As you'll discover, it's a journey, not a one-stop shop, and things change all the time. Stay informed, get educated, and perhaps even get a mentor to help guide you. I got one, and I can tell you he saved me a lot of money and time. In my humble opinion, good mentors are like cheat codes and worth every penny. They can get you from A to Z with shortcuts, much faster and far less expensive than if you were doing it by yourself. So you can always consider an experienced mentor to help supplement your learning. So that's probably the easiest way to get started in the stock market. It's how I got started, and it's how I continue my education to this very day. The way I see it, I want to learn everything I can about investing so I can be a better investor. I want to take an active role in building wealth, and in time, I hope to pass this down to my kids. My final thought for today is in social media and on the news, you may see a lot of negative reports about the social market and a huge downturn. Honestly, these days, there's a lot of peddling of doom and gloom. Now, I'm not here to comment on political agendas or market manipulation. Quite honestly, I'm not interested. But I am interested in building wealth for my family and I, and using the best strategies to do that. And what I've learned from my own education and my mentor who's invested for 30 years is to continue investing every month regardless of market conditions. No one can time a market, and history shows that the best growth comes in a red market. Consistency of investing and time in the market will always win, regardless of market conditions. In fact, if the market does go through a correction, or if it even crashes into a recession, I will invest more into my favorite ETFs and my favorite stocks. Investing history be my guide. And history has shown to ignore the negativity and be consistent. The crash in the 1920s, the 1980s, the 2000s and COVIDs, for those that stayed invested, made the biggest gains. Consistency is key. But don't take my word for it, do your own research. And if you want to learn about some other money mistakes I've made, then watch this video right here. I'm going to take you through them. And just how much money I lost trying to do it my way. I'll see you there.